We'll slip into a very short break. On the other side, we'll invite the management of Shriram Properties to discuss their business outlook. The company has also acquired a plotted development project of the Golden Gates Group. It was a stressed asset with the lending entities a part of the IFL groups. For more details on this project, we'll be joined by the MD of Shriram Properties.
Welcome back. You're still tuned into Mid-Cap Radar on CNBC TV 18. Shriram Properties, that is the stock on our radar, has been on an acquisition spree. Most recently, it acquired a 125 crore rupee worth project, Golden Era in North Bengaluru. That is a Golden Gates Group property. Murli Malayappan, who is the MD at Shriram Properties, is joining us now to discuss this acquisition and the general business outlook as well. Mr. Murli, good afternoon. Thanks a lot for joining us. Well, this is the recent acquisition that you made. Before that, back in November also, you acquired a stake, or you bought a property as well. So is that going to be the strategy for the company, that you will buy projects and then develop them versus developing them from scratch?
It's both. As you see that because of the consolidation for large players like us, markets throwing lots of opportunities on the distressed assets. So we'll be very, very opportunistic. It is not only we should get distressed assets or only fresh land deals. We'll be very opportunistic in this. As the deal is if it is attractive, we will do it. Currently, as you've seen, two stress projects in Q3, we have done that, and quite a lot of projects in pipeline. There are a lot of opportunities at our doorstep now. We have been evaluating those opportunities also. Some of them will rectify if it meets our criteria of returns criteria. Otherwise, we'll just drop. On the other hand, the regular greenfield projects also we are looking at aggressively. As you know that we have set up this fund along with ASK, about 500 crore capital available, out of which 125 crore we are committed for this acquisition with Golden Gate property. Remaining 370 is available now. So hopefully we should be able to consume that also in the next few months.
Afternoon. Can you talk a little bit about this Golden Gates Group, the plotted development project that you've acquired right now? We understand the aggregate saleable area is approximately 10 lakh square feet. What is the value of it? What is the total amount that you can realize? And if you could just give us the path to this realization.
So this is in Bangalore North. It's a most promising location today, and there is a big development potential on both plotted development and as well as apartments. But we chose to go ahead with the plotted development here. It's about 1 million square feet layout, about 48 acres of land. So the sales potential is likely to be in the range of 280 to 300 crores, and we hope to maybe complete this in next 12 months' time. So market is very, very attractive. Here, Golden Gate had borrowed with in India Infoline, so it was struck, and we saw an opportunity. So we struck the deal with a commitment of 125 crores for the project.
Okay, so that is about the Golden Gate project. 250 to 300 crore is the realization that you said.
280 to 300.
280 to 300 crore rupees. How are you funding these acquisitions, Mr. Murli? Because I wanted to understand what kind of cash flows are you seeing? Will you take additional debt for this? And for the other purchase, Villas Realties, how much did you pay? What was the consideration there?
Well, as a principle, we don't want to borrow money and acquire new assets. It will be only through cash flows or equity. As a principle, Shriram Properties has shied away from using the debt capital for creating long-term asset. We will not do it. Our net debt, as you know, that it's about 374 crores. We are on path to bring down to net debt zero in the next 12 to 18 months time. It is in line with our original thought process. It is exactly on schedule. On the new assets, we'll use the internal accruals or equity. This Golden Gate asset we have acquired through ASK platform, what we have set up 500 crore fund. Out of that, we have committed 125 crore for this Golden Gate asset. With the Suvilas asset, we used our own internal cash. Using that we acquired the rest.
Okay, so you have plans to become net debt free. This is something you had indicated earlier, and you're reiterating that. Could you tell us the kind of free cash flows you will be generating in the second half of this year as well as next year, which will help you repay the current debt of 374 crores?
Next to 18 months time, we are likely to generate somewhere between 350 to 400 crores. of free cash flows from the projects. So that will help us to become net debt free. And as I said, we'll not be borrowing money for land acquisition. We'll be only using this either free cash which is available, profits which are available from the projects, or new equity which is available with the ASK platform. We'll use this money to acquire new assets.
So your overall cost of debt is at 12.5%. I wanted to understand what is the breakup like? How much is from banks? How much is from NBFCs? And will this come down? Of course, you're talking about net debt zero levels, but debt will still be there. So what kind of cost of funding are you anticipating?
Earlier, it was skewed towards more of NBFC. When I say NBFC, LIC housing is the major one. So I put that under NBFC category, which is what a higher rate of interest. But in the last 9 months' time, we have brought down the interest rate by more than 150 basis points. Already we brought it down. Now, from this current one, we expect in the next 6 to 9 months' time to bring it down at least by another 80 to 100 basis points. This last 9 months' time, these 150 basis points have come down, despite there is an incremental, despite there's an increase in the rate of interest. The overall rate of interest across the industry has gone up by more than 200 basis points. So we have brought down 150 from our original one. Essentially, we have brought down close to about 350 basis points, net on the debt rate of interest. We expect this to continue further because, again, all the NBFCs, we are closing down and we have moved towards banks now quite a lot. So I expect at least another 50 to 80 basis points to come down in the next 6 months' time.
Last question before we let you go. I just want to understand how are land prices moving right now. We are talking about the flats prices or the home prices going up. What is the contribution of land price hikes in this?
I don't expect land prices to move up in the near future. Again, consolidation is the answer. On the other hand, home prices are likely to move up, will continue to move up because the number of suppliers or the number of players in the market are very, very small. Each market, each city, not more than 8 to 10 people catering to 95% market share. Whereas on the land, not many NBFCs or banks or private equity investors or original landowners who want to dispose of the land, they got very, very few number of developers who can buy a very large fraction of land. Not many people are there to buy today. Hence, there is supply-demand mismatch is very, very high on the land transaction. On the other hand, home buyers, the supply and demand on the home sales, again, it's a very different opposite view. Hence, I don't expect the land price to move up at all in the next 12 months' time at least.
Okay. We'll leave it at that. Thank you very much for joining in. That's Shriram Properties for you. Need a